Welcome and thanks for joining us. My guest today is Dana Shepard, the Associate Commissioner for the District of Columbia Department of Insurance, Securities, and Banking's Risk Finance Bureau. Dana, we call it DISB, right?
That's right.
All right, DISB. How long have you been with DISB?
I've been with DISB for 23 years.
Okay, and what is your role there?
In my current position as the Director of our Risk Finance Bureau, I'm responsible for licensing and regulating captive insurance companies.
Okay, and that's an interesting term, captive insurance company. For the people who are not familiar with that, can you please describe it in a way that's easy to understand, obviously?
Sure. So in the simplest form, a captive insurance company is a limited purpose insurance company that's owned by a single company or organization or a group of companies, and it is used to only provide insurance for its owner or owners.
Is there a particular kind of company that would get into the process of starting a captive?
No particular type of companies. They're pretty much any industry that you could think of utilize captive insurance companies. We have captives in the energy sector, financial services, higher education, nonprofits. So all sorts of entities form captives for various reasons.
So when someone hears insurance company, I would imagine most of the time they think of commercial insurance company.
Yes.
Can you describe the difference between a captive insurance company and a commercial insurance company?
Certainly. So a typical commercial insurance company, of course, sells insurance to the general public. But as I just said, a captive insurance company only provides insurance to its owners. Second, a captive insurance company can only provide commercial insurance. So by law, a captive insurance company cannot issue policies to you or I, say for homeowners insurance or private passenger insurance. It can only be for commercial. And the last biggest difference is your typical insurance company that you would see a commercial on TV looking at a football game. They're licensed in every jurisdiction where they do business. A captive insurance company, however, because it only insures its parent, is only licensed in one jurisdiction as opposed to being licensed in every jurisdiction across the United States. And I should mention, for the viewers may not be familiar with this, but the District of Columbia, along with the states, are the primary regulators of insurance companies. The federal government does not regulate insurance. And so captive would be licensed in DC, for example, and even though the organization may not be based here, the risks that it covers may not be in the District of Columbia, that's perfectly fine. The risk can be anywhere, even if the company is headquartered in DC.
Would you say that this is a newer industry, or have captive insurers been around for a while?
It's not, I would say it's not old. The first captive insurance company was organized in Bermuda in 1962 by an American by the name of Frederick Rice. When sometimes we go to conferences, and this is an international business, if you can imagine that. It's not unique to the United States. And sometimes I debate with colleagues in London, and they say, well, captives have been around since the 15th century. They were insuring cargo ships and cargo, but the modern day captives started in 1962. And currently there are 38 jurisdictions in the U.S. That license captive insurance companies, and about the same number in Europe and in Asia.
What are some of the benefits of forming a captive insurance company?
Well, the primary benefit is to, of course, save money. So, when you write a check to your insurance company, you never see that money again. Hopefully you don't have a claim. If you do have a claim, perhaps it will be paid if the coverage is there. But once you write a check, it's gone. So there's always this debate within organizations about reducing their insurance spend. And so you do that by self-insuring. So you bring some of the risks that you're transferring to a traditional insurance company, you retain that risk, or you bring it in-house. You can do it a variety of ways. A lot of companies do it using a captive insurance company. And if you're successful over time, you can reduce your insurance costs, you save money by keeping risk as opposed to transferring it. And I will mention also that it's not an all or nothing proposition. You may find that you can retain portions of your risk, and then you could transfer more of the higher limits, so the catastrophic limits, to commercial insurers. In case you have a 1 in 100 year event, you still can have commercial coverage. So it's a mixed bag.
When you look at how captives can be used, are there limitations?
There are a few, but not very many. I mean, one big thing that you will see is sometimes if for property insurance, so a lot of commercial property owners, developers, if they're loans, which they're almost always are loans, the lenders will require that the insurance be purchased by a commercial insurance company that's highly rated. They will not allow a captive insurance company to provide insurance. So there's a workaround for that. So the owner of the captive, or the owner of the property, can enter into a contract with a commercial insurance company that's highly rated, that meets the requirements for the lender, and then they can form a reinsurance captive, which essentially allows the commercial insurer to transfer the liabilities from its organization to the captive insurance company. So that can be a limitation. There are also limitations around licensing and things like that. But there are very few limitations. Of course, I mentioned the companies can't write personal auto and homeowners and things like that. But for the most part, you could do pretty much whatever you need in a captive.
So let's talk about the nation's capital for a second as a location for all of this. The District of Columbia Department of Insurance, Securities, and Banking, that is a city agency, right?
That's correct. Okay. We are in many agencies in the district, but ours specifically, we function as a financial services regulator, and we are unique. We're the only jurisdiction in the United States, the only city that regulates insurance. So this is a state function for the District of Columbia.
That is interesting. When did DC start licensing captive insurance companies?
So we passed our first captive law in October of 2000, and we issued our first license to a medical malpractice company in April of 2001.
And how many captives has DC licensed since 2001?
We, as of yesterday, Monday, we have 360 companies that we've licensed.
Okay, some of the names that people might recognize, or some of the names of the companies that stand out in your mind?
Certainly. So, as you can imagine, there are many companies, but some of the household names that most people will recognize. So locally, we have AARP, Amtrak, Fannie Mae, Freddie Mac have captives in DC, University of California, the New York, New Jersey Port Authority, SpaceX, Goldman Sachs, Berkshire Hathaway, probably leaving a couple out. And actually on Monday, we actually licensed another company for Elon Musk, for the Boring Company. Some people may have heard of that company. So we have quite a few that people will recognize, and of course there are many other smaller organizations that people may have never heard of.
So why would a company choose DC rather than one of these other jurisdictions that you're talking about? There must be many benefits that go along with being located here in the nation's capital.
Sure. So I always tell people, and it's just not my view, it's sort of a widely held view. When you're looking for a captive jurisdiction, you want to first look for a jurisdiction that has experienced regulators. We have 10 full-time dedicated employees in my team. That's all we do. Is regulate captive insurance companies. Except for 3 of us, we all have more than 20 years of experience doing this. And so it's very important. Sometimes people will go to a jurisdiction where the captive programs are administered by the same regulators that regulate commercial insurance companies. And that's not always a good fit, because there are differences in the way we regulate. And if people will find that if you take a captive and try to regulate it like a traditional insurance company, it usually doesn't work very well. The captive owner will get frustrated, and then they'll end up moving to a better domicile. We also, say to people it's important that the jurisdiction have a good captive law. I mean, not all the laws are the same. The captive industry is very flexible and it's very innovative, and there are always emerging risks and things, new corporate structures, and so the law needs to be flexible enough to accommodate those types of changes in the industry. And we believe, and DC does a very good job of meeting the needs of captive owners.
So how would a company go about forming a captive in DC? How long is that process, and what all goes into it?
So a lot of what goes into it happens before they actually come to us with an application. So typically what will happen is so the risk manager or the CFO will hear about a captive and they will want to learn more about it. They may attend conferences, they may talk to a consultant, and they go through this process of looking at the various types of insurance coverage that the organization has. Many large organizations have lots of insurance. I mean, property insurance and liability insurance and directors and officers. Many organizations have 6, 7, 8, 10 lines of insurance. And so they look at each one of those lines in consultation with an expert to determine whether it makes sense to continue to transfer those risks to commercial companies in return for a premium, or whether it makes sense to bring some of that risk in-house, retain that risk, and thereby reduce the cost of insurance, and to sort of analyze that. That process can take a couple of months, or it can take a year or more. At some point, organizations will typically engage a property and casualty actuary to look at the organization's loss experience over a 5 or 10 year look back, and then determine if they are going to retain those risks in the organization, what it would cost and how much capital is required. And then that decision usually gets kicked up to the board, and they decide to either move forward or not. And then if they do decide to move forward, they choose a domicile and complete the application process. And typically for us, once we get the application, it only takes 3-4 weeks to get it licensed.
So it sounds like there are a lot of steps, but it doesn't sound all that complicated necessarily, even though there are a lot of steps to it, right?
Right, there are many steps. It's not complicated. It's just a matter of an organization has to have the appetite to retain risks. So if you're uncomfortable, some organizations aren't comfortable. I remember talking to a risk manager at an organization about setting up a captive, and he indicated that he was very familiar with the captive, but the board just wasn't comfortable because you're essentially putting the organization's balance sheet at risk when you say, okay, we're going to retain this risk, and if a loss occurs, we have to pay for it, as opposed to just writing a check to the insurance company and then forgetting about it. So it's not a complicated process, but it's an important process that requires a lot of thought. And of course, you can manage the risk and prepare for that, but there's always a possibility that you could set up a captive and everything can be going great, and a month later or a year later, you can have that 1 in 100 year loss happen very early in the program, and you need to be prepared to deal with that. So there's a certain amount of risk associated with that.
How much does it cost, generally speaking, to set up a captive in D.C.?
Well, that's a difficult question to answer because it really depends on the organization, the type of risk, the limits. Some organizations buy sort of low limits, like $1 million per occurrence. Some organizations buy limits to $50 million.
I would imagine it varies widely. Yeah.
But at a minimum, so for, just to get a license to get going, I'm always telling people, so there are 3 components. There's the capital requirement. The minimum capital generally is $250,000. There's premium. So just like a traditional insurance company, you have to pay premium to your captive. Again, that depends on your loss experience, the type of coverage you're buying, all of that. So that varies. It's hard to put a number on that. And then the third component are the expenses. We haven't really talked about this, but unlike a commercial insurance company, where you go to a building and there's the underwriting department and the legal department and the actuarial and the claims. A captive insurance company typically, not always, but typically does not employ individuals to do those activities. These activities are performed by a group of service providers through contract. And so when you're forming a captive, and even after it's formed, you have this relationship with an attorney, an underwriter, a claims provider, and those services can run anywhere from $75,000 to $150,000 a year to pay all of the various people who have to keep the captive running. So what I tell people generally is, if you're a single organization, you generally, the organization, not the captive, but the organization generally has to have about $12 million a year in revenue, or spend about $800,000 a year on insurance to make it feasible. If you're in a group, so if you're a group of physicians, a group of nursing home owners can come together and form a group captive, that brings the cost down because you're sharing it among the members. And so generally there you would see the group members would generally generate about $2 or $3 million a year in revenue, or spend about $60, $70, $80,000 a year in premium. If you're a small business and you spend $10 or $15, $20,000 a year in insurance, it's not feasible because the costs to run the company are too high.
So if someone hears that information that you just gave there, a company is interested in forming a captive, what advice would you give? How can a company interested in forming a captive learn more about doing that here in DC?
Well, I would encourage everyone to visit our website. It's disb.dc.gov. There's a lot of information about captive insurance companies on our website, and our information is there. You certainly can reach out and talk to me anytime. And if you decide to move forward, we do have a list of service providers, actuaries, auditors, captive managers, who are frequently they will talk to you at a high level just to see if it makes sense, and they won't charge you for that. And of course, if you decide to move forward with it, you can work out, an agreement with them to move forward. But always just call us, give us a chance to talk about it, and we'd be happy to help you in any way we can.
All right, very good. I'd like to thank today's guest, Dana Shepard, the Associate Commissioner for the District of Columbia, Department of Insurance, Securities and Banking's Risk Finance Bureau. I'm your moderator, Nick Iannelli. For more on this discussion, visit WTOP.com and search DISB.